Hello traders, Gary Wagner here. It is 12:13 in Honolulu, 5:13 in New York on Thursday, 7th day of March 2024, and this is the evening report for gold and silver. Although gold continues its dramatic rise, closing to new record highs consecutively now for over 5 days, the difference we have seen over the last 2 days is the net root cause of these gains, because over the last 2 days they have been based on dollar weakness more than buying coming into the market, as we will talk about when we pull up some charts. Gold gained $10.90, 0.51%. That is important. Currently, we have April futures at $2,167.40. Silver also gained on the day, but only by 0.35%. Again, I am focusing on the percentage gain because when we look at the dollar, you will see that dollar weakness was greater than the gains in both gold and silver. Most active contract of silver is currently at $24.58. The primary point that I made in my opening letter, as well as today's show, you can see on this daily chart that the dollar has declined by almost a full percentage point over the last 2 trading days. Today, for example, the dollar is down 0.53%. That is greater than silver's rise of 0.35 and greater than the rise in gold of 0.50%. A couple of days ago on our daily report, I talked about the fact that 2 technical studies, the stochastic oscillator as well as the relative strength index, RSI, were both showing that gold was overbought. The key with these oscillators is that when a market is moving to new price highs, that can stay pegged at an overbought scenario and yet not decline. That is the big caveat to that. We have now seen gold rise with higher highs and higher closes for 6 consecutive days. I'm starting from Thursday, February 29th as the first day in which it had a higher high than the previous day. There is a candlestick pattern that correlate to a number of new price highs. In candlestick patterns, it's called an 8 to 10 new price high. It signals exhaustion because when you have that many consecutive new price highs, we are getting close to a point in which the market will correct. As you can see, I have the stochastic oscillator. It is sitting at 95.10, and so it is still well overbought. RSI will show the same thing, but yet gold continues to rise. But today and yesterday were different because today the $10 gain is 100% the result of dollar weakness. Yesterday, we had a strong gain in gold, but only half of that was due to buyers bidding the precious yellow metal higher, with the remaining amount due to dollar weakness. These other days were primarily the net result of speculative buying in the market. That being said, Powell has still not put forth any timeline. According to the CME's FedWatch tool, overwhelmingly, we are looking at June as the most probable point for what I'm calling liftoff, the point in time in which the Federal Reserve implements its first rate cut since they began to hike rates in March of 2022. Traders, unquestionably, we are witnessing history with gold moving this much higher in such a short period of time with relatively very little fundamental news to change the market sentiment as great as it has. And what I mean by that is that the Fed has come no closer to revealing the timeline of the first rate cut, and that's what everybody is waiting for gold to start moving. It is moving ahead of that announcement. I still believe that the recent rise has been overwhelmingly too optimistic, but the market speaks for itself in that what we have seen is a rise from approximately $2,040 to $2,160, and that's a net gain of $120 in gold over the last 6 trading days. I do believe that if we continue to see gold move higher, we are getting extremely close, whether it's 1 or 2 or 3 days away, before some sort of correction takes place. And that will give us the opportunity, because I am still exceedingly bullish, to position ourselves properly. As far as silver goes, today we did see it climb, but the gain was only 0.35% compared to the dollar declining by 0.5%, which means that all of this gain plus was directly the result of dollar weakness, with fractional selling pressure coming into the market. The same in the case of gold. At least there wasn't really any active buying, because the differential between how much the dollar lost in terms of percentage decline and how much gold gained in terms of percentage gains were roughly the same. So whereas silver did go up, and the key to me is the fact that it broke above this key level, which is $24 per ounce, the 50% retracement. Remember, it's a long data set beginning back in October, when silver was at $21.45, up to these highs that came in at the end of November at $26.55. Therefore, I am still cautious about silver, because I believe that silver has been moving up in tandem with gold. And if we see gold correct, as I believe that it will, whether it's 1, 2, or 3 days from now, I think that silver will follow suit. But traders, here is the wild card, or the one unknown, and that is dollar weakness. Because as you can see, prior to yesterday, when we saw a pretty strong decline, 0.43%, today a little bit over 0.5%, resulting in declining by a full percentage point since yesterday, because for the vast majority of the recent rally in gold, and to the same degree silver, up until yesterday was not really predicated by dollar strength or weakness, because it had very little movement on a daily basis. We saw gold rise straight during all of these days, and yet the dollar either climbed a little bit or fell a little bit. Nothing like what we've seen over the last 2 days. If dollar weakness continues, we do not have to see continued buying to have gold continue to at least stabilize in price, but not correct. So this is the wild card. If the dollar continues to decline, it's going to be difficult to get any momentum on the sell side for gold, because it will be supported by dollar weakness. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.